Your sports card investment could be taxed at a 32% capital gain rate. I don't want this to blindside or happen to anyone, and so I'll go ahead and explain how that's possible, and then what are the options to reduce your overall tax rate on sports cards. I'm Johnny Petrucco, a sports card tax pro, and I mainly help small businesses in the collectibles world. I also help those guys that are selling cards as a side hustle, and there's the true collectors and investors. Now, the big talk has been Kevin O'Leary, Mr. Wonderful, $13 million purchase, and he has coined, which has been the case before he mentioned this, but sports cards is an alternative asset class. Now, this will fall under two categories. Sports cards can either be inventory or a capital asset. It's inventory if you're classified as a business, capital asset if you are a hobby, collector, or investor. Take a look at this video. There are 7 tests to determine whether you fall on the hobby or the business side. But in general, when possible, it's most advantageous to be classified as a business because in addition to the cost of card and the cost basis of that, you can expense all your operating expenses, postage, your supplies and travel and so on. But in terms of asset class investments, this is what we're talking about for collectors and investors, and those that do this as a hobby. Although I have not found any tax code that says sports cards are collectibles, of course we can infer they are. Now, collectibles are taxed up to 28% capital gain tax rate. Now, before 1997, gains on stocks were taxed at 28%, along with collectibles and other capital assets. But the law changed to reduce the long-term gains, stocks that are bought and held over 1 year, to a maximum of 20%. But collectibles, and for argument, now you could debate whether a sports card is a collectible, according to the IRS, but assuming it is, that stayed at 28%. So that gives us the discrepancy. Stocks up to 20% and then collectibles up to 28%. There was some more law that was passed where some long-term capital gains bought and held for over 1 year can be taxed at 0%, depending on your tax bracket. It's somewhere around $90,000 of adjusted gross income. If you are married filing jointly and you hold the stock for over a year, you pay 0%. The next is 15% according to your income, and the highest tax bracket will pay a maximum of 20% on their stock gains. The highest federal tax rate is currently 37%, and so that's a 17% kind of break for a long term. If you bought and sold the stock within the year, you will be at that ordinary income tax rate, which is 37%. Now with collectibles, you are up to 28%, and there's no brackets like 0, 15, or 20 for stocks. Thankfully, it's not a 28% flat rate, and that's confused by some people. So if you are in the lower tax bracket, say you're in a 22% tax bracket, you pay ordinary income tax on your capital gains, which will be 22%. You do not pay a flat 28%. That is reserved for those that are in the higher tax bracket, and so the max tax break you can have is from 37% ordinary income, and now you're down to 28% for a long-term gain. There also is net investment tax, and that's an additional 3.8% for those over $250,000. I think for 2025, $250,000. And so now you're talking 28 plus 3.8%. 31.8%. So these are big numbers, and that's just the federal, the state situation as well. So large tax rates. And especially as transactions are more public, done through auction houses, it's harder to avoid, especially the $13 million purchase. And who sold that will have, now they're probably a business, and so they can go ahead and use that as inventory expense. But are you a collector, investor, a hobbyist? You know, this is a gray area, but if you're selling just once a year and your intent is to buy and hold for a long time as an investment, you would fall under that category, and you're going to go ahead and report this on Schedule D. Schedule D, capital gains and losses. And what's interesting about with cards as a capital asset, you don't have the basis reported for you. Okay, the cost basis of your card includes the cost of the card plus the shipping and insurance to get it to you, along with any auctioneer fees or any kind of fees, payment processing to get to you. And add that all up, that's your cost basis. If you have a Robinhood or Schwab account, at the end of the year, they'll issue the 1099-R to the IRS, and they typically report your cost basis in that stock and then the price you sold it at. So it's all done for you. You just plug in that number. Now with crypto, not every wallet will report the cost basis. And it's the same way for sports cards. In both situations, you're self-reporting your sports cards. Typically, there are some exceptions and could be some exceptions, but generally it's an honor system. So the IRS will have you report your cost basis on the Schedule D, and that will be the year in which you sell it. Even if you bought it 10 years ago, have to do your best to get the cost basis, and that will be your capital gain on Schedule D, and that's the one that's going to cap that to 28% or up to 31.8% if you're in the higher tax bracket. Reach out to me if you have any questions about the whole capital gain situation for the collector investor side. And in general, if you're a business, I've been helping a number of guys set up. If you're scaling, I can help with bookkeeping and taxes. So feel free to book a call with me. I'd be happy to talk to you. Two more things to mention for my collector investors and hobbyists. Let's say you bought at the peak in 2021. So you can find your eBay record and now you sold it in 2025. Decent chance there's a loss. You can deduct your loss and offset capital gains that you made on stock sales or anything else in the capital asset classification. And the same rules apply. If you have a $20,000 loss, let's say you offset it against a $10,000 gain, you still have $10,000 loss, but that'll cap at $3,000 for the year and you can carry forward the loss. Keep that in mind. And the last point is you do not pay self-employment tax on your Schedule D capital gain from Collectibles. The dreaded self-employment tax, 15.3%, that's your payroll, is on Schedule C. Schedule C is for the profit and loss of a business. And so that profit, which will be much smaller than your Schedule D profit, because on Schedule C, we have operating expenses. And you take the profit of Schedule C and multiply by the 15.3% self-employment tax plus the whatever tax bracket you're in. So that's a great benefit with being a hobbyist. You don't pay the self-employment tax. But even still, if you do the math, usually there's enough operating expenses to drive your profit closer to zero. And even with that extra 15%, it still usually is better. But of course, you can't just label I'm a business. There are certain procedures like separating funds and so forth that would classify you as a hobby or a business. Hope that was a little helpful. Please reach out again or comment if you have any questions. We'll be happy to talk as well. At Sports Card Tax Guy, I'm helping my clients trade their IRS stress for financial success. I'll talk to you soon.